to another closing bell for the week ending 3rd of August 2012. Wow, time passes so quick that we have already seen 7 months of action, and the market is almost all-time high. When we were all-time high, we were talking about 1644, which actually correspond to the majority of the analysts that you see in Malaysia, which is the 1644. A lot of the analysts that I talked to, and they were saying that this is at as high as you can get, but whether we're going higher, that seems to be a question mark. Now, in terms of PE times to the market that we have in our KLCI, which is almost there. Currently we are around 15 or 16. The high side has been 20 when the market was very bullish. But having said that, let's proceed on with what we have seen so far. Now, last week we were talking on let's looking back on my notes. We did say it was a beginning of selling that we see here. Okay, let me see. We was beginning of a selling that we were looking at. We have 2 weeks of 2-bar reversal on a weekly basis. However, the support at 1620 was supported. Although we have a widespread bar down, but the market couldn't go lower. As a matter of fact, this was a test. You notice this? Let me just show you this here. Right. Notice the volume. Compare the previous 2 volumes. Right. So this was a beautiful test. And then the market did hold, and as such is going through more tests. Now, if my prediction is right, going through tests is a sign of strength. If the market is ready to go over and break the 1635, the market is going to go higher. As this morning on the TV station, Capital TV, I did give a comment that our market seems to have tested the 1627 and likely to rebound. In short, the market has been tested. Let me just show you what I mean here. Okay, just close this back. I'm going to switch on to half-hourly data. Now, as you can see, this one in here, we've been moving pretty much in the sideways market. 1630, 1621. That's what next week is important. We have 2 tests in here, but you notice the low, and compared to this low, which is 27, and this low, 28. So the low seems to be going higher. Now, next week, it's as good as everybody. If it breaks the 35, it's going to go up. That's how it looks like, because the support at 1620 is holding up. So we should be adding new fresh position if the market breaks the 1635 level that we are seeing as of now. This is a half-hourly chart, if you can see here. Okay, now let's switch this back to a daily chart. So everyone's okay? Happy? Just give me a response there, so I'll make sure I'm not talking to an empty group here. Is it okay so far? Can you listen to me? Alright? Okay, good. I got my first response. Okay, good. Alright. So that's the market has been. Okay. Now, next thing we want to do is to look at the foreign funds. Now, foreign funds is interesting. Okay. For the first time, we are seeing, let me just bring this up here. We are seeing negative territory in here. Just a little small speck here. This negative for the first almost for the last 20 to 30 trading days, the KLCI has been a net buyer by the foreign funds. So only yesterday we have seen the first negative foreign funds in here, and it seems to be dwindling down. Now remember, if we hit the negative 200 or 300 million by the foreign fund, that's going to be a really huge sell-off, right? Now, so having said that, the 1620 support that we talked about earlier, which is around this level here. Let me just get back here. Oh, I can use a pencil here. I can use a pencil here. Okay, this level 1620. Okay, this level in here has to be supported, the 1620. So because If this level is broke down, then it's going to see down. We will have tests in here, so that's a lot got to do with sign of strength. Now, going on across the causeway, SGX, the Singapore stock market, you will see that currently we have strength coming in. This is a nice buy in here, although I don't have volume in here, but you can see later on when we get onto the main chart, you will see this thing in here has a sign of strength in here. Market's ready to push up. You might see